Hi, this is Darius of the Hedgeye macro team. We just recently held a call on the GOP's proposals for tax reform, highlighted by three main sections, starting with follow the money. In this section, we really identify what the ultimate impact of tax reform is likely to be on the economy and financial markets. The key takeaways were tax reform is actually sneakily bullish for the US dollar for reasons that you might not expect, and inevitably very bullish for capital in the expense of labor, and ultimately very, very bullish for the stock market, which obviously the market continues to price in, but also in ways in which you might not expect. So certainly be tuned in for that.
Yeah, so we discussed the housing-related provisions in both proposals. There's five key provisions there, virtually all of them negative for housing. So you had the mortgage interest deductibility provision, grandfathering of existing loans, SALT and property tax provision, exclusion of sale, and the repeal of private activity bonds. On the margin, negative across all five. If we're looking at just kind of simply distilling it down and looking at winners and losers. Losers, middle, high income earners, primarily your 200 to 500,000 K earners in high tax states with home values north of $500,000. Those people who do currently itemize are going to see their tax liability increase and potentially significantly if you're in some of these high tax high home value SALT states. The winners, the converse of that essentially, so those are your low, middle income earners in low tax states, home values below 300,000, and those who are going to see an actual net benefit from the doubling of the standard deduction.
All right, great. Yeah, and then on repatriation, this is a topic that both sides are relatively in alignment about for now. So you have this potential move to a two-tiered system, where liquid assets get taxed at a higher rate, and then you have illiquid assets at a lower rate. You have this move to a territorial system as well, like the rest of the G7 that's on the table. And then you kind of have this limiting of certain kinds of deductions in that on money that's coming back. So I think if you just look at the pool of money the pool of money held overseas, say it's somewhere between 2 and 3 trillion, very heavy in the tech sector. So you have like the top 9 or 10 tech companies that have ultimately almost 25%, almost a quarter of this money on their books and their foreign subsidiaries. So I think when you think about what's happened this year with growth accelerating, and then what this is, the comp tailwind a lot of these tech companies have had, it's just been a huge market catalyst. This idea of steepening comps versus this narrative story of repatriation is an interesting one. We just kind of hash out some different return of capital scenarios in that third section.
Cool. Thanks, Ben. Thanks, Christian. And thank each of you for participating.